This bull market can only end one way, and we've kind of done it to ourselves. The chart on the screen basically looks like I took a bunch of different colored markers and drew on a marker board. It looks kind of ugly, but the point of it is the current bull market is the red line. It started on October 12th of 2022, which also means the current bull market turned 2 years old just a few days ago, but it's been pretty much par for the course of bull markets since 1966. The S&P 500, ever since October 2022, is up 62.6%. But what I really want you to pay attention to are the two bull markets that significantly outperformed the rest of the bull market since 1966. And they happen to be the two most recent bull markets. The one that started in early 2009, which is the green line, that bull market finished up 91.4%. And then the blue line, which was the bull market that started in early 2020, and that finished up 102%. This is no happenstance. Let me explain this to you. Basically, ever since the great financial crisis, when Bear Stearns failed, our Federal Reserve has made the conscious decision that they will do anything in their power to avoid recessions at all costs in our economy. This means that basically at any given point in time, the Federal Reserve is stimulating, and they're willing to push on the accelerator even further if some sort of crisis or credit crunch presents itself in the economy. They want to avoid recessions at all costs, which is a good thing short term. It takes risk out of the system. It takes risk out of the economy, and it takes risk out of the stock market. And that's why you've seen valuations balloon. You know, everybody talks about how forward price to earnings ratios are higher than ever before. And, the Buffett ratio or the Buffett indicator, it's higher than ever before, but there's a very good reason for it. It's because investors are willing to pay a premium for companies in the United States of America because the Federal Reserve is more active than ever, and they're doing everything in their power at their disposal to avoid recessions in our economy at all costs. It makes sense that investors would pay a premium for companies if the risk of bankruptcies and recessions occurring have declined over the last decade and a half or 2 decades. We can Google it and see that recessions have become less frequent and shorter in duration in the United States of America. Again, that's no coincidence. That's because the Federal Reserve has been stimulative almost to a fault, and eventually it will be to a fault. Eventually things will fall through, but the important point of this video is the only way that this bull market plays out is an extreme melt-up, where asset prices balloon to heights we've never seen before, and euphoria returns to a level that makes the 2021 euphoria look small. This has been the most hated bull market that I think I've ever experienced. I'm a young guy, but I started investing in 2016 or 2017, maybe even earlier than that. I started investing as a young teenager, actually. But maybe the better way to put this is this bull market has been deemed as impossible since late 2022. We've had inflation, we've had interest rates going up, we've had wars, we've had people complain about market breadth and how it's not wide enough, so it's not a legitimate stock market rally. We've had election concerns. The list just goes on and on and on and on of different bearish catalysts that people have used for forever now. Yet they continue to be wrong, and stock prices continue to march higher and higher and higher and higher. So I wanted to go back on my channel. A lot of people don't know this, but in October of 2022, so this was in the doldrums of the bear market. This was when people were feeling pain. Shout out to you if you've been part of the channel for that long. But these were some of my most disliked, most hated videos that I have ever created, yet they turned out to be some of the most accurate videos that I've ever created. On October 6th, I made a video titled "Stocks Just Bottomed and Nobody Noticed." 89.5% of people liked that video. That is extremely low in the world of YouTube, if you're not aware. And then on November 7th, 2022, I said 92.58% chance of a monster stock market rally. 86.2% of people liked that video. And then in early January 11th of 2023, I made a video titled "Prepare, a 2023 stock market boom is coming." 86.8% of people liked that video. These videos didn't get many views because people thought that viewpoint was stupid and it was silly. Turns out that, we ended up having some of the most accurate content put out on YouTube. And again, shout out to you if you've been part of the channel for that long. I'll show you how my portfolio has done since October of 2023. And this is kind of remarkable. I actually didn't even think it was this good. But my portfolio has had a cumulative rate of return of 148% since October of 2023, and that compares to the NASDAQ's return of 36%. So we have significantly outperformed the NASDAQ, which has been an outperformer in the stock market. I mean, the NASDAQ has been kicking butt, but we even kicked the NASDAQ's butt. And if I zoomed out and I showed you my performance since October of 2022, I mean, it would look like stupid. It would look fake. So I'm sticking with the 1-year returns. I'm showing you this because I think it is so important for people right now to get exposure to the stock market, get exposure to Bitcoin, just get exposure to assets, because as the Federal Reserve remains active and diligent and they stimulate the economy at all costs to avoid recessions, you have to own assets. Otherwise, you will be left behind. You know, there's this wealth gap in the United States of America, where wealthy individuals continue to do very, very well, and then kind of just the rest of everybody else struggles a little bit. And I'm here to tell you today that if this market melt up plays out and you don't have exposure to assets like the ultra wealthy do, you're going to continue to be left behind. So I'm no expert. I don't have a crystal ball. Our performance on this YouTube channel kind of speaks for itself. I never encourage anybody to blindly follow stocks I buy, stocks I sell, moves I make. But I want to extend the invitation to you to subscribe to this YouTube channel and then join the membership. Hit the Patreon link in the pinned comment, and you'll get a better understanding of my analysis of the economy, my analysis of different companies, where I think the best place to put your money will be. Again, I'm not going to sit here and tell you today that I am going to be 100% accurate and you're going to get rich, but I will tell you today that I'm going to give you my 100% effort, because I think it is so important for everybody to get exposure to assets today. But let's talk about this. The next step for the stock market and what I think is going to happen. A lot of people are going to think this is silly, but this is just reality and the way things are setting themselves up right now. It's this reality. So you can either get with it or you can continue to sit on the sidelines. You know, that's one of the stupidest things I see people post about or comment or reply is they'll say, I'm not going to buy because the charts don't tell me to buy right now. Get rid of that. Get rid of that mindset, because, man, ever since the end of 2022, I've heard the same exact argument. The charts right now look terrible. The charts right now are telling me not to buy, so I'm not going to do it. And you know what? Those people have missed out on this tremendous rally in the stock market, and they're going to continue to do so. And again, that's a fact. That is reality, and it plays out again and again and again. You cannot outsmart the markets by looking at a chart. I'm sorry, there's no such thing as a perfectly predictable market, because if it was perfectly predictable, everybody would try and front run that market, which, if you think about it, that would render anything that's perfectly predictable as perfectly unpredictable, because it would throw the entire cycle off. It would throw every pattern off. It's silly. It's silly. You need exposure to assets right now. And the beautiful thing about the stock market and Bitcoin is there is no minimum investment. You just have to get exposure with whatever you have, whatever you're able to put into assets. You need to do it. Again, that's my opinion. I'm no financial advisor, but man, I feel strongly about this right now. Anyways, this is the setup for the stock market right now. And I'm going to start with the Q3, quarter three earnings reports, which it's becoming earnings season again. In the second quarter of the year, lots of companies were presenting negative earnings surprises. And as a result of that, it made analysts become sour on Q3 earnings results. You can see that in the green line here on this chart. This chart shows you S&P 500 operating earnings per share 2024 quarterly consensus forecast. So this just shows you what analysts are forecasting for each of the quarters of the year. Well, Q3 is the green line, and you can see ever since the end of Q2 or Q2 earnings season, analyst expectations for Q3 earnings have cratered, and they have not bounced back at all. They're actually at a low for the year. And this comes as economic surprises have gone positive. There's something called the Citigroup Economic Surprise Index. When it's positive, it means that economic data is coming out better than expected. And when it's negative, it means that economic data is coming out worse than expected. Well, throughout Q3 and throughout the end of Q2, actually, this index started to pick back up. It showed economic data was better than expected, and that's true. I mean, we track We track the labor market on this YouTube channel. We track all of the economic data that exists, really. We track it, and we have seen that the economy right now is still trending above average. It's growing faster than average. This is a very healthy economy that we've been in, and the results and the data, they've shown better than expected numbers. As a result of that, I think that analysts are way off sides when it comes to Q3 earnings. And this sets us up for a stock market that balloons to all-time highs again and again and again and again throughout the balance of this year. Right now, analysts for Q3, they expect Q3 earnings growth year over year to be just 3.5%, 3.5% for the quarter. That's historically low. That's historically low. If you ask me, I actually think the S&P 500, the companies in the S&P 500 combined, they're going to do probably at least double that. I think they're going to come in with 7% plus earnings growth in Q3 year over year. So the bar has been set extremely low for this earnings season. You can call it manipulation, you can call it whatever you want, but it's the reality of the situation. This is an easy hurdle for the stock market to get over, to jump over. The expectations are going to be super easy to beat and beat big. And again, that sets the market up to continue to hum higher and higher and higher and higher. And the other thing that tells me there's a lot of money still sitting in safe havens, there's still a lot of doubters of this bull market. There's people on the sidelines waiting, that the crash is going to happen. It's going to happen. It's going to happen. They've been saying it for 2 years now to no avail. We can look at money in money market mutual funds, which continues to set record highs right alongside the stock market continuing to set record highs. There are now basically $6.5 trillion sitting in money market mutual funds. This is money that is getting risk-free return by sitting in money markets, by buying, U.S. Treasury bonds or bills. This is risk-free yield that as the federal funds rate comes down and the Federal Reserve stimulates, even though I don't think we need it right now, this is kind of the picture that's being painted. As the federal funds rate comes down, the risk-free yield also falls, which means this money, at least some of it, is going to come out of money market mutual funds and go back into the stock market. That's another reality of the situation. This is that factually is going to provide a lot of buying pressure to the stock market as interest rates come down. And that's not even talking about the overall stimulus that the economy is going to feel and the additional money that's going to be in people's pockets as a result of that stimulus that's going to put buying pressure on the stock market. But we can also look at the price of gold. Gold has always been viewed as a safe haven asset. Gold prices are at all-time highs and well above previous all-time highs. There's a lot of money sitting in safe havens where people don't want to take any risk right now because they're convinced the stock market is going to fall. But again, this is my viewpoint. I think the stock market is going to melt up, and it could melt up for months. It could melt up for years. And if you don't have exposure to assets, you're going to be left in the dust. You have to get exposure. I don't know how many times in this video I can say it, but it's not enough. One thing that people, they worry about is, okay, the U.S. government, the federal budget deficit, it continues to widen and expand. Our debt numbers continue to climb. The government continues to pay more money in interest on that debt, and that's what this chart shows. It's about to exceed $1 trillion in net interest paid on U.S. government debt. This is scary. This is a scary thought. We're now spending more money to service our debt than we are defense or military spend right now. But the side to the puzzle, or the piece to the puzzle that people are missing, is that although, it's scary, it's a scary chart, we have to realize, okay, who owns the United States government's debt? Well, let's go back to this chart, money market mutual funds. It's people in money market mutual funds or people with high yield savings accounts or Warren Buffett or companies, citizens of the country that actually own the United States debt. So as interest payments climb, it's actually stimulative again. It's another thing that's stimulative to the economy because it's putting more money into companies' pockets because it increases their overall profit margin. It increases the amount of cash they have. It makes them healthier companies. But it also gives consumers and citizens that own the government's debt more disposable income when it comes to the end of the month. This gives citizens more money to spend, and they do spend it. That's what consumers do. We spend and invest our money. That's what the government wants us to do. So let's talk about the melt up and how it might melt down or how it might end. This is what you're looking at here is how it will end. The U.S. government will spiral out of control. It will. It'll reach a point where we have so much debt on our balance sheet and we're paying so much in interest that things just fall apart. That things just get so inflationary. That's how it ends. We have a hyperinflationary bust that the Federal Reserve is forced to hike interest rates to double-digit percentages. When we think about the great financial crisis and how ever since then the Federal Reserve has made the conscious decision to avoid recessions at all costs, that decision made it so we didn't feel a depression in 2008 and 2009. And you can talk to any economist and they'll tell you that we probably should have had a depression in 2008 or 2009. And then you think about the great virus crisis, the pandemic, how literally the global economy was shut down. Historically, that should have resulted in a depression, at least a significant recession. But because the Federal Reserve has chosen to be more active than ever, we didn't see that depression. We didn't see that recession. So although it has saved us a lot of pain short term, all it's doing is the Federal Reserve is kicking this can down the road, kicking it down the road further and further and further. And at a certain point, we're going to see a hyperinflationary bust. And that could be a significant problem. But until then, you have to have exposure to assets. Euphoria is going to come back. Investors are going to take more and more risk on in the markets as the Federal Reserve continues to stimulate. I posted a tweet on X today where I said we're trying to drink from the global monetary stimulus fire hose during a time where our economy probably doesn't need the extra push on its back. When it comes to stimulating our economy, we probably don't need it right now. All of that money goes somewhere. So you have the choice today of getting with it and hopping on board and seeing a lot of success over the coming few years, or you're going to be left behind. And I want to say this, it doesn't take that much money just to get some exposure to assets. But if you're sitting on the sidelines saying a crash has to happen, I'm sorry, you're going to be left behind. You will be. It's been happening for the last 200 years in the stock market. People that have been on the sidelines, they've historically been making the wrong choice. Eventually this will end, but we are still years away from it ending. We're years away from seeing it. And I'm somebody that wants to see people succeed. That's why I do this for a living. I want to see people succeed, and it's those success stories that keep me going. People that message me on Twitter, message me on Discord, leave comments on my YouTube channel. Rex, you helped me get out of debt. You helped me pay off my parents' debt. I bought my first home. I paid my mortgage off, whatever it is. Those are the stories that keep me going. That's why I do this. I want you guys to have success. And right now, I feel so strongly that you have to get exposure to assets. So I've made a few videos on my YouTube channel talking about the assets that I personally have gotten exposure to. Companies in the stock market that I personally have the utmost confidence in, that I think are great investments right now. Again, I never want anybody to blindly follow me into the things I buy or sell. But if you want to get a better understanding of my thought process and philosophy and get those buy and sell alerts, again, feel free to join the membership. I have a 100% refund policy if you don't find value in it. And I have yet to have to refund anybody. So that should speak for itself. But I've talked about Flux Power. I've talked about One Stop Systems. I've talked about PayPal stock. I've talked about Tesla before. Those sorts of companies, Bitcoin mining stocks, those are the companies that I think are going to benefit most from this melt-up scenario. You see, although the stock market is at all-time highs, and although this bull market has been going on for 2 years and it's up 62.5%, there are still tremendous opportunities out there. As interest rates were hiked, Well, all of these small cap companies were put into the same basket and they were punished the same. And that really isn't fair because a lot of these small cap companies, they have very healthy balance sheets and they have very healthy growth, yet they have been punished. And it's been my mission to put together that A list of companies for you that I believe have been unfairly punished. And we've had tremendous success with that list. I mean, another company I didn't mention a minute ago was Fluence Energy, ticker symbol FLNC. Ever since I mentioned that, that's up 50% in like 2 months. Absolutely crazy. That's the sort of stuff that I look into. That's the sort of stuff I research. But if there's one thing that you take away from this video, I've said it probably 8 times, is get exposure to assets. Quit sitting on the sidelines. Quit looking at the charts that are supposedly telling you that you shouldn't buy stocks right now, because charts can't tell you crap about the economy. They can't tell you crap about business. They can't tell you crap about risk appetite of investors. But anyways, I hope you guys enjoyed this video. Leave me a like if you did. It helps me out tremendously. And on your way down there, hit the subscribe button for me. And also leave me a comment, a stock that you're buying right now. I'm always open to looking into new companies and new opportunities. And yeah, have a great rest of your day. Stay blessed. Keep 10 toes to the ground and your chin up. Peace out.